Hello everyone, I'm Marty Pospisil from Pospisil Realty Group here for our November 2021 market update. On a side note, pop onto the Georgia Strait online paper. There's a really good article that Carlito Pablo just wrote on our recent sale at 6674 Marine Crescent. Definitely worth checking out. Quite interesting what he found in his research. But let's jump right into our market update and get into some stats that you're all waiting for. I just got all of these from the board. So we are going to bring you guys right up to date on what's happening in our market. Now, as you recall, the metric I use to determine how busy the market is called the sales ratio. And if the sales ratio or the absorption rate in the market is less than 11%, we are in a buyer's market. There's downward pressure on prices. If the sales ratio is between 12 and 20%, we're in a balanced market. So it's not favoring really the buyers or the sellers in that particular balanced market. But if that sales ratio or absorption rate increases over 21%, we are in a seller's market and there's upward pressure on pricing. So it's the balance what determines the price fluctuations. So let's get into this and see where we are in our market speedo, our really cool infographic here. Basically, it's all about inventory. The inventories are down, and that's what's supporting our market right now. We're at 36% average sales ratio for Metro Vancouver. So let's jump right into the sales and have a look at what that means. Year over year stats. Total listings are substantially down. This time yet last year, we had almost 7,200 listings in Metro Vancouver. We've only got 5,200 now. That's a big drop in inventory. Total sales are actually up slightly from last year, 1820 to 1847 year over year, and prices are of course up overall in Metro Vancouver by 8% from this time last year. Okay, let's go onto my table so we can see what's exactly happening in each of the product categories. Let's look at detached houses here in the yellow band first. Sales activity year over year, the activity for houses is down. The number of sales for detached houses is down, and the benchmark price is up by 21%. Substantial jump in detached houses for Metro Vancouver. Marginal increase again, month over month. We're showing marginal gains in our monthly pricing, just statically keeping up there. And that is pretty well replicated for attached townhomes and duplexes. Overall, year over year, amount of activity is down, the number of sales, but pricing is up 19% for townhomes and half duplexes. And also we've got the marginal 1.2% gain from last month in pricing. Now condos are in their own little world. The activity is up from this time last year. Prices are also up at 10%, but we still have that marginal gain of pricing from last month. So very interesting to see those stats, how they compare to last year and what they're doing right now. Okay, 4 market drivers. The cost to borrow money. The mortgage rates are on the rise now. As rates rise, there'll be a negative impact on the real estate market as some buyers will get priced out of the different categories. As they get priced out, they may not sell their home, and that overall affects the market. Now, savings. We had a lot of people spending. There's been a consumption boom, as you see in a lot of the stats. You'll also see later on in the presentation. That's taken place. A lot of those savings are now getting depleted. Now, couple that with the mass layoffs, or what are they saying, pay without leave for the unvaccinated employees from some larger companies. That is going to coincide with the end of the federal COVID benefits. Many people are going to be impacted on these factors. So the actual savings is being depleted. So that factor is getting diminished. The demand for more space, stronger than ever. It's always carried us through the last 18 months of our market. That will continue. People want to get into bigger space. But the most important factor, the supply of homes. That's what's going to determine where we go this fall and next year. The supply levels are still historically low as we head into the last months of the fall market. This factor will be the most impactful metric influencing our market in the new year, as I'm going to discuss in my forecasting section later on. So, what's hot and what's not? Let's look at each of the categories. Remember the sales ratio cutoffs: below 11 buyer's market, 12 to 20 balanced, and over 21% seller's market. Hooray! So let's jump into detached houses. Vancouver West Side down to 17%. Up 17%. Last month, as you can see, we were at 12%. What? That's some grown-ups. Great movie, by the way. We're jumping up. Now, why are the prices increasing for detached houses in the West Side? Simple, one-word answer. Inventory. Not enough of them. You'll see what's happening in my inventory graph later on. 17%. So we've jumped up from barely scratching a buyer's market to a pretty substantial balanced market for detached houses, okay? Still nowhere near where we were in our peak of April, but still substantial uptick. And you've seen some amazing sales that we've done just in the last week. If you watch my sales activity report, it just posted yesterday. So that's detached houses West Side. Condos and townhomes West Side, 35%. I'll say it one more time. What? What's going on here? 35%. Last year we were at 30. Sales ratio going up for condos and townhomes in the West Side. Interestingly enough, again, one-word answer. Inventory is down. So that's quite interesting. Not surprising. Condos and townhomes downtown, we have a drop. Interestingly enough, we're seeing the downtown condo market fluctuate month to month. You can see it goes high, low, and then it starts to increase again, and then we get a drop. So there's a lot of fluctuation through downtown. It's quite an interesting one to watch, but we are in a seller's market for downtown right now. So that's good news for those sellers. We've had a few downtown sales in the last little while. Let's jump into the east side. Now this is quite interesting. Same answer to this as well. We're at 34% sales ratio for the east side. Most of the east side neighborhoods are undersupplied, and that's a jump up from 30% last month. Remember the incredible 53% in April that we had as our peak. So again, strong seller's market, detached east side. Condos and townhomes, east side, wow, 49%, craziness. Now we were hitting those numbers back in June when our market was still June, May, we're hitting some great numbers. April, our peak at crazy 84%. We're at 49%. Vancouver east side, condos, townhomes, super, super hot. The Real Estate Board of Greater Vancouver stats, you can see this green line here is actually dropped now a little bit. But predominantly we're in a seller's market in all the categories. So let's look at what's happening in the suburbs. No surprise, same story there. All the sales ratios throughout the entire Greater Vancouver area are up in houses, except for Port Moody and Pitt Meadows. Pitt Meadows down 9% and Port Moody down 21% in sold. So a bit of a drop in the sales ratio on both of those, but the main contributing factor, not enough inventory throughout the Lower Mainland and Greater Vancouver. Attached monthly variances, same story. All the sales ratios are up. There's been a resurgence of that market, except for downtown Vancouver, which we just saw, and Cloverdale, interestingly enough. So we see those ratios across the Lower Mainland again as the demand grows now in fall and inventory does not, the sales ratio will increase. They're all connected. Okay, what's next? The forecast. This is the big one. The pandemic, when will this end? So here are the latest stats. The pandemic will affect consumer confidence, how many people list, buy, etc. That's why I report on it. If we look at hospitalizations, the serious cases of COVID-19, you can see we peaked in October and we are recovering. They're dropping. Good news. If we look at actual cases, across Canada. We're also seeing that peak back in October dropping down. Also good news. Good news all around from a pandemic point of view, and you're seeing that in the news as well. If we look at their biggest neighbor, US, about 10 times the population, you can see they started to peak earlier and dropped earlier as well. So we are shadowing them, but their caseload is a lot higher. You can see they almost had 80,000 cases as of the last report, but they're about 10 times the population of Canada, and we're down to probably about 2,000 cases. So you can see the ratio of cases by population is much lower in Canada than it is in the US. And also the number of deaths, 0.6 deaths per 100,000 in the US, and we're actually in Canada here, we're about 0.1 I calculated here. So we're doing quite well because most of us are vaccinated. There's no secret there. It's all about vaccinations. Across Canada, we have 74% fully vaccinated. In BC, 88% of eligible residents 12 years and older are vaccinated. That's a great number. We're almost at 90%. And in Canada, 12 years and older for eligible residents of Canada, we're at 89%. So with their first vaccine, they've received 1 dose. So really good numbers across the board from a vaccination point of view. That's why our numbers are really good here from an infection rate and of course deaths and so forth. So Mr. Bean's very happy. He's giving us the thumbs up there. Now this is also interesting. Again, no surprise here because you're hearing this in the news. The unvaccinated case rate is 6 times higher than those who are fully vaccinated. And more importantly, the average weekly deaths by vaccination are 12 times higher than those that are fully vaccinated. Why are people still not getting vaccinated? I don't understand. They have reasons. I'm not sure why. But when you see this, the science is there. So 90% or else has gone up. It's actually 95%. According to the latest reports, the pandemic won't be over until 95% of the global population is vaccinated in or developed natural immunity. That's a pretty high number. In Canada, we're already there. That's why our numbers are good, but the borders are opening, the world's traveling. So if there are parts of the globe that are not vaccinated and the virus starts to spread, again, we could be in trouble. But vaccines save lives. There's my plug. Okay, consumer confidence. If we go down to the unemployment rate, that has declined substantially. In British Columbia, 6.2, nationally 7.1%, much better than where we were just a few months ago. Employment levels by wage tier, you can see the high income earners are way back above pre-COVID levels. The medium wage earners are back above our pre-COVID baseline, and the minimum wage earners, again, a lot of them affected by tourism. Restaurants opening up, some restaurants closed permanently. They have been affected. We're still not back at pre-COVID levels. Tourism, well, no surprise there. A little bit of a jump here. You can see at the end of summer as things started to open up. That's going to help as well. Post-pandemic employment overall for BC above pre-COVID, and for Canada, we're back at where we were when COVID-19 started. So all good news on employment. Rental rates, interesting. I just threw this stat and you can see how they jumped in April when the market went crazy and rental rates went up, but they did level off in summer and they're starting to come back down again a little bit. So good news for tenants. Now, the Consumer Price Index, what the problem is when things become more expensive, the Consumer Price Index rose actually 4.1% on a year-over-year basis in August, and that's the fastest rate since 2003. This rise is mostly a result of accumulation of price increases in 2021. Now the problem with that is, with all these increases in prices, like 24% in clothing, 22% in gasoline, 22% motor vehicle parts, etc., most things up, that does infect inflation. Even though retail sales are up, you see that the consumer confidence has begun to fall. We've got business consumer confidence falling, and that affects the cost of borrowing. And you can see with the surge in the consumer price index being well above the 3.1% pace recorded in June, that pushes up our inflation target rate of 1 to 3%. So when we're above that, there's tremendous pressure on the rates, which in turn reflects the lending rates. So the banks are beginning to increase their lending rates now. As you're hearing about, that's going to continue. So that's that factor that I talked about earlier. Inventory levels. Why are the prices increasing? Well, it's all about inventory. Now you'll be able to see that here. Detached houses, west side. Look, we're getting even less inventory than we did last month. And that is dropping for houses. Condos, townhomes, also we see the drop. If we go into the east side inventory levels, dropping for houses. Condos and townhomes, dropping. No surprise, the sales ratios are so high. It's all about the inventory. When that changes, the sales ratios will change and the prices will fall. It's all connected. If we look across Canada, you can see this is inventory across Canada. You can see drop in inventory. You can see that uptick in activity for the sales to new listings ratio as that inventory started to drop. So there's a correlation across Canada, there's a correlation in BC, and correlation in Greater Vancouver and Metro Vancouver. And this is my historic average price graph since the beginning of time in 1977. And you can see that little squiggly uncertain behavior where we were trying to decide, is that going to mean a drop, or is it going to go up, or is it going to go straight? It actually went up. Why did it go up? I think you all know the answer to that now. Inventory. So, and again, that's reflected in new housing starts and inventory levels. The most important line here is the yellow line here. You can see that inventory dropped since April. And remember, that was our peak pricing in April, and activity also in sales has dropped. Housing starts, home sales here in blue dropping, inventory dropping, but that is propping the prices up when that inventory drops down. Same as region by region all across BC. They're all reflecting the same market. Can China save us? That's a big question. A lot of clients ask me, well, China has a plethora of problems from energy supply shortages to some large development companies, Evergrande being one of them, on the brink of insolvency. There's a lot of opinions out there that their economy's been overheated for many years and is in a bubble. So they got a lot of problems they're working out. Does that mean they're going to be able to bring a lot of money over here and invest? Possibly not. It's really tough to say, but I wouldn't rest a lot of hope in that just because of the fact that there are some difficulties already back in China. So I'm not expecting a big jump here. They got to raise, I think, $5 billion to stay afloat. When things start tumbling there, it's going to tumble even more. And you can see the impact of real estate activities on GDP by selected countries. China is way up here. So if their real estate industry runs into trouble, their GDP will be affected and their economy will be in trouble. So, and that brings up my next slide here. If the promised election platform of banning foreign home buyers over the next 2 years in the upcoming changes politically with our newly elected government, that could dramatically change and close that little window. And also they were talking about the banning blind bidding. Oh, that would be horrific from a selling point of view. If you have a house, you would be disclosing all of the bids, which makes it very difficult for a good negotiator to pop out some incredibly good above market value sales. So banning blind bidding would affect sale prices. Banning foreign home buyers certainly would. And those are two factors we're watching closely. No announcements yet, thank goodness. But as soon as the announcements come out, there'll definitely be an impact on our market. So here's Metro Vancouver housing prices by the HPI Housing Price Index. You can see our prices since the beginning of the pandemic have gradually increased. There's April, May when we hit our peak. There's been some slight drops here. Now we're in that phase where we're going to see some changes because there's a whole bunch of irons in the fire. We're trying to figure out what's going to come out first and impact our market. So let's look at a couple scenarios here. This will depend on these factors, where we go. If there's no tax changes and the interest rates remain low and inventory levels stay low and Santa Claus does not get stuck in the chimney, we will get further price increases. Okay, makes sense? However, if the rates increase only a bit and the inventory levels are about constant, there's no panic up or down, our market will stay constant, market pricing. Our prices will remain constant. However, if, for example, there's a capital gains tax change and they increase capital gains, and furthermore, there's a ban on foreign home buyers. Well, just the announcement alone, whether that affects how much money is coming in or not, will spur some action from people who are on the fence on listing. And if there's interest rate increases affecting the bottom feed in our market all the way up through the top, because those little homes have to sell in order for the mid-range going to the higher end home, that all feeds from affordability and interest rates. And if the pandemic persists, because that is a negative factor in our market, but that looks like it's increasing, and consumer confidence falls, may result in mass listing surges, which of course, no surprise there, we could see an immediate drop in pricing in our market. So one of those three things is going to happen, and it will depend on all of these factors. Fun fact, outside of what I'm talking about, Paris just announced that they are making their city a 100% cycling city. They're spending 250 million euros. They're building 130 kilometers of new bike lanes on top, and they're making the 52 kilometers of bike lanes permanent. So for those visiting Paris in the future, you may want to rent a bike and get around. And this is just another real positive side to the pandemic, is we're looking at our cities differently. We're putting outdoor seating in our restaurants. We're building more bike facilities. It's really had some positive impact on how we live. And that's kind of a fun little note I like to throw in. Fun fact. So that's my market update for November. I hope you enjoyed it. Thank you very much for joining me again. If you have any questions, I get lots of questions from my viewers, and I appreciate them. You send them to my email. Subscribe to my page so you get the updates when I post. And like me on, or like us on Facebook. Always happy to get more and more subscribers and likes, so more people can benefit from this information. And that concludes my update. I'm Marty Pospisil. Thank you very much for joining me, and I'll see you in the next one.